What?
I'm
Yeah, there was.
I'm recording now, and thank you, Kevin and I. We're just sitting here chatting, we're talking, we're making each other laugh. It's really great. Thank you for coming to Jesse Trades. We have a special guest today. I have a special guest today. It's Kevin Avery, the one and only with Chat with Traders. He's been with Trade the Pool before. He's still with Trade the Pool on occasion. And correct me if I'm wrong. I see you on Friday night, our Friday night live stream with Trade the Pool. The Fivers, Kevin Avery, man, thank you so much for coming to chat with little old today. Kevin Avery.
No, I'm this man. I'm in the presence of greatness with Jesse Trades. The same way. I feel the same way. So, yeah, I was with Trade the Pool prior, and I mean, still do work with them. Obviously, I trade there with them. I've been a successful trader, so I love Trade the Pool. I love recommending it. When I found Trade the Pool, I don't know, man, Jesse, the trajectory just went straight up from where I was at. I was having trouble trading like prior with accounts, and of course no PDT now, but I was trading different brokers offshore and whatnot, and I'd slip up with one trade and not have that amazing drawdown feature on Trade the Pool, go deer in headlights, blow it up, paralysis by analysis.
Don't go
But
too far ahead just yet. I want to go back just a little bit for you, Kevin. So
yeah,
you started in trading when? How long have you been trading, and what brought you to the markets?
yeah, that's a fascinating question. 2016, I was finishing college, Liberty University. I studied cinematic arts, and I really enjoyed, film at that time. Obviously, that career is just going to be AI driven, at a certain point. But and it is. I mean, seeing videos these days. I'm like, it would take an entire day to set up production to get 2 seconds of that. It's a lot of work. The filmmaking was then, of course, with AI, not so much now. But yeah, when I've met trading, I love Jessie. She's my love. And like I told Katz in a different interview, it was love at first sight for me, but not so much the other direction. She didn't love me as much. I fell in love, Jesse.
Well, what was that moment like? You saw trading, you saw someone else trading. Like, what was that moment where you're like, oh, there she is? Since this metaphor has turned into a woman on us. So go ahead.
Yeah, I probably shouldn't use pronouns in today's day and age. Let's just say it. The market. Because it really is it's an information driving machine. It literally is a generating opportunity machine. That's all it is. And people get, we get so caught up in directions and this and that, and is it hurting our feelings? Are we right or wrong? But you're not right or wrong. It's just printing information. We just have to take that information and know what we're going to do. But yeah, we could talk. I could talk in circles forever. Let me get back to what you were asking about. It was less the money, Jesse, for me. It's always been less the money for me, this space, which I think you need. Any of the roles or analysts or chat with traders or this or that. I don't, I'm just a little old me. Like you said at the beginning of the interview, like I think I'm fairly humble. I mean, I don't think very highly of myself. There's this quote, Jesse, that says, who said it? It said, it's not about thinking less about yourself, but it's about thinking of yourself less. I really, maybe, perhaps, but
Lewis, okay.
It might be. It was somebody in that ballpark. Yeah. But I mean, I don't know. It's just, I found trading, and trading found me, and it was less the money for me and more of, I'm an introvert by nature. Of course, I'm very extroverted. I think most are that are introverts. I'm very extroverted when it comes to what I love, right? I'm sure a lot of us are like that. We're introverts for the most part. Like, you put me around some common folk people out here, Jesse, I don't even know what to talk about. But you put me around a trader like Jesse Trades, and we just have so much fun. We just talk, and I mean, there's endless conversations to be had about the trades that we've taken. I think because I'm an introvert by nature, I love trading. I love being at home. I could literally, Jesse, I could sit at home all day and sit here and trade and have interviews like this and talk to other traders. I love it. That's part of what I liked about it. But then I loved the self-development of trading, where you've come across that as well, where, man, if you master, and I talk to some professional traders and they'll say the same thing, you master trading, you master much of yourself. You master trading, you master life, really, because so much of trading, Jesse, requires traits that will perform well in the real world, then that is patience, being humble, and not being greedy in the right moments. I know being greedy sometimes that is off-putting sounding, but in trading, there are times you have to be greedy in the markets where you have to capitalize on those A+ opportunities. So you really just refine your edges, if that makes sense. You work, it's so much self-development on yourself.
Yes.
That's what I love about it. I mean, do you agree with that in your experience?
Oh, absolutely. That's an absolute correct assessment, because once you can understand trading, you really are understanding yourself. That is a weird psychological way of looking at the markets, but it is so true, because FOMO is real. Revenge trading is real. Are you a vengeful person? Do you hate to lose?
Yeah.
If you're that type of human being, then you're going to be humbled by the markets every single time, because the markets will humble you, because it can humble all of us. And I think that's what's also so great about the markets is like, if someone is just the king and they're so good, like there's no true how do you put this? There's no true Tom Brady of the markets. Now I know there's big names. I know there's obviously names of people that have made multi-million dollars, millions and millions. And that's great. But even they have losses. They're not 100% perfect. So it's like one of those things where, like in sports, I suppose, you could compare it to a Tom Brady. Like even he had his losses in the Super Bowl. Even he was humbled. He may have been the greatest, but there are times where you will be humbled even as a great trader.
Yeah, I mean, I think that's a great assessment too. To add to it, I think you have to be great in those moments, though. Like greatness can come upon you when you least expect it. Let's put it that way, because I like so many traders. So just talk to Peter Brandt, of course, talk to Alex Tamiz. I bring up these traders often because they say, like, Peter Brandt said 20%, Alex said 10, or he said 10, where 10 to 20% of the trades you take are going to result in the majority of the profits. But those few trades are oftentimes likely the least expected. So you don't necessarily know which ones are going to have an outsized performance relative to your other trades, but you have to put yourself in the probabilities. It's all like a trading, it's a psychological game warfare. That's why I focus. I know you mentioned the psychology. I focus so much on it. Of course, got the Bible right here of psychology with Mark Douglas, Trading in the Zone. You master. Maybe that'll be the theme of this podcast. You master yourself. You master much of the market, and a lot of it is even the attitude. Brett Steenbarger on positive trading psychology, where you have to focus on your strengths. If you sit there, Jesse, and you focus on, like, what do I constantly need to work on? You're constantly optimizing. You can fall prey to that trap where and I did this when I first started. I'm like constantly looking. I'd say like looking for the Holy Grail. I've mentioned like your chart. You can't even see your chart because it looks like air traffic control. You got so many lines up and down. You're constantly in the search for the Holy Grail. You're optimizing, optimizing, optimizing. When in reality, what is best for you, you're looking past it. What's best for you is to simplify, to KISS, keep it simple, stupid. Because when you just are always optimizing, you tend to then focus on the object of your fear, which becomes the net result, because you're focusing so much on like not doing something that you end up doing it. And Peter Brandt just told me, so I was reviewing that video that's coming out soon. He said, look, when he knows his setup so well, then he takes it and he steps away, because if you're sitting here in front of the computer, you're going to make a mistake. You're going to, because you put too much emphasis, Jesse, on every little up and down candlestick, and I did that today on a ticker. If I would have left it, it would have been fine. If you just shut the computer after taking the trade, guys, you'll be fine. But you got to stop always trying to optimize this, optimize that, when in reality, just eliminate a lot of the noise, because random trading will equal random results. And a lot of traders that start out, they have to find the system and edge that works for them. I understand that. But this is why 99% of traders fail in the first 3 to 4 years. And when they're looking, it's because they equate, Jesse, they equate button smashing to like more money. It's like the more I trade, the more money I'm supposed to make. When in reality, that's quite the opposite. But Yeah. What are your thoughts on that?
Absolutely. Well, let me ask you this: how long did that take? How long did that lesson? And it is a very important lesson, and I've been caught up in that too, where it's like most of my good days, most of my best days are 1 to maybe 3 trades at the most. Those are my
Nice.
most profitable days. The ones where I get in trouble are the ones where I do 15, 20 plus trades and I've dug myself a hole and I can try to get back out of it. And sometimes I do, and sometimes I don't. I feel like it's those couple of prime setups that I feel comfortable taking where I go, all right, this is the moment where I go down and I go down, I double down on something or triple down on something where I go, this is the moment, as opposed to trying to force things, right? Because as traders, it's so easy to see things that are not there, right? It's easy to go, well, maybe it's doing this. Maybe it's actually, maybe back. Maybe it's going to go a little bit higher. When in reality, like, you have to know your own setups. You have to know that. How long did it take for you to develop that kind of understanding as a trader? That is, you're like, okay, I'm in this, I'm doing this, and what's gone wrong? And at some point, and we're always trying to fix, like you said, we're always trying to optimize. But was there a point in your trading career where you've said, okay, I think I turned a corner in this moment where I understand this now?
I don't think I'm capable of turning that corner. There were several good points you made there. And yeah, if you try to force things into existence, we know. Have you ever forced a fart, Jesse? It doesn't end up well.
Sure, bro.
I'm of the belief, look, when I die, this quote I would like on my tombstone: you never make it, you're always making it. I'm a big believer in that. That's why I think, like, I can tell, look, people may say, oh, you're prideful for making this claim. Look, of being humble. I can tell Jesse's humble. Josh is humble. These traders that we get together, we know we're humble. And why is that? Because the market has very much humbled us. We have been very humbled by the market. When we get an inflated ego, guess what? Right back down, shrinking right back down. So that's why, look, I'll never pretend like I'm somebody that's made it, but they are capable of. I have my equity curve has been going in the right direction. I've been making a good amount with Trade the Pool, and I got plenty more this year that, Lord willing, I'm going to be paying myself out here. But I think you have to put up guardrails, is the point I'd like to make, Jesse. And I make that emphasis because if Trade the Pool gives me those guardrails, and that's why I'm a big advocate of them. I think if I were to take that money and go somewhere where I could not put those guardrails up, I would be in trouble. And I equate that to driving a car without wearing a seatbelt. Of course, it's some traders would like to think that they are capable of doing that, and they are capable, but there's risks involved with it. There's plenty of people that have died because they've gotten hit and not wearing their seatbelt, and that's what I'd be afraid of. Because look, I've heard of so many traders, Jesse, that they don't put those parameters on their account, and in the blink of an eye, a teleportation candle comes out of nowhere on a Chinese ticker, and they're down 100% plus. I have seen so many GoFundMe started, Jesse. So I don't want to. And I just saw one of the traders I just interviewed lost 6 figures on one of these teleportation candles. So look, I'm trading very well right now, but I don't want to pretend like I'm incapable of losing that. But I will say, Trade the Pool, those guardrails, put them on the account, because that's what some of these traders told me. With your broker right now, if you're at a broker, message them and say, put the seatbelt on. Make sure the brakes are working. Put essentially this, traders. I'll be for real. Put the drawdown on the day. If I'm down this amount, my problem with some of the other brokers, though, Jesse, they couldn't auto liquidate me, and I get in the way of myself very often if I really like a trade like that. That's where the bias creeps in. I don't know if this has happened for you, if there's anything to trade that comes to mind, but when I really like a setup, Jesse, like I can be like, I'll adjust the risk parameters a little bit here and give it some more wiggle room, and then those are the ones that you take the largest losses on. So you take the largest. Look where we're going with this, traders. You take the largest losses on the trades that you have the largest bias on, because you increase the emotional dial, which is your position sizing. So you increase that dial, your larger position. This is where you have a larger bias. And then the 10 to 20% of the trades that we least expect are the ones we make the most money on. So what does that tell you, Jesse? I mean, isn't that incredible?
Yeah, no, that's absolutely incredible. And like you had mentioned earlier, it came to mind was that the most time I get nervous at this point in trading is when I have about 3 to 4 green days and I'm feeling good. Because honestly, that's when I go, okay, now you've done this before. You've done this where you go 3, 4 good days. You think you have this, all of a sudden you think you have the markets figured out. That's when I start getting a little apprehensive because I know, and I've had this happen before in the past, where that next day, that's when I'll have a big loss. It can wipe out 3 or 4 days worth of trading activity that I did. And so, yeah, the longer I've been in the markets, the more I've just said, hey, if you get on a high horse, don't stay on it. Just say, hey, cool.
Yeah.
Had a couple of good green days. That's awesome. Next day. You know what I mean? And it's a new day. Like we all know, markets are different from day to day, and stocks do fluctuate and change, and even how they move. There's obviously things that we're looking for if we're looking at technical analysis or chart patterns and things of that nature. But Tesla moves some days like crazy to the downside, and then other days completely choppy, and it feels like an entirely different stock. So it's definitely got that going.
And it's psychological, right? I mean, a lot of that psychological. 3 days later,
extremely
had a green streak. Yeah, yep. And it's funny you mentioned the technicals. So on Chat with Traders, I just interviewed Paul Scott, who was a London Metals Exchange.
10-second or so rundown of Chat with Traders and what you do with them, please.
Yeah, I've just got the opportunity to become the host over there, third generation host. They've done such a fantastic job, of course, that and that Tessa and Ian were recently doing it, and then Aaron Fifield prior to that. But man, I just a dream position and role to be talking to traders like this, and really learning the craft. It really is a craft. It's not a science, not an art. I mean, it's a beautiful, beautiful craft that is trading. And so I'm just living in a dream, Jesse, being able to do this. And we got a lot of big plans and exciting things coming for you traders. Like I'll mention, maybe first here on your podcast, we got a Chat with Traders book that I'm working on in the background that's going to synthesize a word I try to all the voices from like years and years and years into different collective themes. It's going to be incredible. It's going to be amazing. So stay tuned, traders, for that. But I talked to Jack Schwager. He said, and I can't believe I've talked to him, Jesse, again. I
was listening to your interview the other night, and I thought, man, Kevin Avery's coming on my channel. He just talked with Jack Schwager. This is great. I love that.
Yeah.
And the people, Peter Brandt, other traders who you get to talk to, it really is people that have been in this for a long period of time and have their bona fides in this. I mean, they've definitely they know some things in the markets, and yeah, that's really cool.
Yeah, like I just got reached out to speak to a college. This is roles opening up so many doors and opportunities, and I love it. I mean, that's literally if I was created for any pursuit, this is it, to add value to traders. I mean, that's really what I'm here for. I think. I mean, it's like the God-given thing because it's been innate since the 2016 discovery. I just love helping traders out. That's ultimately what it comes down to. I mean, the money is a byproduct for me. It seriously is. I mean, I've made lots, I've lost lots. I'm doing fine now, but the family spends the money. I just button smash and talk to traders. Seriously, the money's
get better than that.
It doesn't. And so I'm living in a dream world with this. And you mentioned technicals, which it reminded me. This is really funny. Oh, let me mention the Jack Schwager. He said there's no singular approach. Okay, so he told me, look, amongst the 100 and some wizards he's interviewed, no singular approach to trading. Okay, so so you take that, and I just interviewed a London Metals Exchange. He was a floor trader over there, and years ago, Paul Scott, and I was asking him about technicals because he's not a huge fan of technicals. I knew that video was going to get some people that weren't too thrilled about that because there's a lot. I mean, look, there's a lot. When anyone comes out with a 100% claim, this is the funny thing because I asked Paul Scott, I said, look, point blank, I said, can you be a successful, consistent, profitable day trader and solely rely and focus on technicals? And he said, no, you cannot. He said he said if you would have brought like a head and shoulders pattern onto the floor of the exchange years ago, they would have laughed you out of there. Is what he said. But you know what's funny to the like little dichotomy with that? I got then I got Peter Brandt on. He's going to be the next episode release. And Peter Brandt tells me he's been trading for 50 years. He did not become a successful, profitable, consistent day trader until he discovered technicals.
See, there you go. There's no one way, right?
Not one way.
I mean, I just finished Unknown Market Wizards, the book before previous the latest release from Jack.
Yep.
And Chris Camillo, he doesn't use chart patterns. He doesn't use technicals. He uses TikTok primarily to actually gauge market sentiment. And he doesn't even really look at like exactly where the stocks. There's no, what is it? One size fits all.
Yeah, there's no singular approach. And like you said, look, there's 3 different types of analysis. There's that I really believe in: technicals, fundamentals, and trader. So Chris focuses on the trader, but that's really important, because if you can see where the sheep are going,
yep,
you can go the opposite direction, right? You know where the 90% are going. But there's this thing called groupthink, and I think psychologically, maybe naturally, we all can fall prey to that groupthink where it's like everyone thinks, for instance, SpaceX is going up, after it IPOs, and then it IPOs and goes straight down, 100% or whatever it's done. So,
you my 5 shares from the IPO price, but it's Elon. I don't underestimate Elon. A lot of his companies,
yeah,
they'll go down and then they'll come back up. So
that depends on your time frame, and that's an important topic traders should know and identify. I just talked to Jeff Holden, who's the head of trader development at S&B Capital, and he is like so full of wisdom. Incredible guy. He was telling me they use this framework that's called ASET, ASET, and there's a significance to actually the order of this acronym. So the A stands for allocation, the S stands for stop, E entry, T target. And the allocation is important. So you want to know, like, how much am I willing to allocate to this trade, and where's my stop? A lot of new traders, Jesse, they want to know where that entry is first. And Peter Brandt said trade identification is one of the least important things out of any strategy. It's what you do thereafter with it. And he used this analogy where it was a different kind of poker analogy, where he said it's less important about the hand that you get, but more important how you trade that hand. Does that make sense? So traders, you just got to know what hand you have and know really how to play it. So it's less important about the identification, know how you're going to allocate it, and then focus on the risk side before ever thinking about the entry, because amateurs, they'll focus on the money and less risk. You got to focus risk first. There's, again, significance to that order.
Absolutely. So with your own personal trading, do you like large caps, small caps? Do you do kind of everything? Have you traded at all? Is there a particular bread and butter type of sector that you like?
Jesse, I feel like I've found the broken slot machine, and I don't want to leave it. I'm doing well at it, and I haven't traded many other asset classes. I haven't traded other markets. I really haven't traded crypto, and the options I know futures is huge. I haven't spent much time there. I've just been in the land of the broken slot machine of small caps, and I'm just looking for those asymmetric opportunities. So I'll identify and I just react, Jesse. I just react, and there's no secret to the strategy that's made me right now so far on this year. Probably up 30 to 40K on TTP that I can withdraw so far, and it's really just been doing this. Just trading the asymmetric small cap opportunities. I don't take crazy heavy size traders. I take the probabilities. I think there's a random distribution between the winners and the losers, and we don't really know, and that's okay. Mark Douglas would say we don't need to know which ones are going to be the winners or losers. You take the trade and you move on. So I'll look the asymmetric, meaning I just react. I'm not predicting. I used to go long, but I felt myself predicting too much. I will, like you mentioned, you're involved with SpaceX. I like that. I like those plays. I like long term, on the long side. But again, time frame's important, Jesse. So what time frame are we working with? Because of course, SpaceX, a high percentage. I won't say anything with a certainty, but a high percentage over the long haul. Like you're going to be great there. On a long position. So what time frame are you working with? So I take shorts because in the shorts and small caps, asymmetrically, it's more PvP in my opinion. So player versus player, you got I'm looking for these 3, 4, 5, 6,000% movers intraday that are quick. Quick is important because the quicker the move, the weaker the trend is. So on the long side, I like little, I think Josh would call them what, steady eddies. Like you're taking the little stairs up, right? Little stairs up. That's great. That's a good trend. And you hold on to that for a long time and you'll be fine. The trend's your friend, as they say. But on the short side, intraday, I'm looking for to take advantage really of the 90 percenters, if I'm being honest. I mean, where is the greed? Because in small cap land, Jesse, here's the thing. You got these companies that are in a tough financial situation, and you have these traders that are also in a tough financial situation. They're greedy, right? They're looking for, but they're greedy into the FOMO. Like I'm greedy on the other end. I'll take the greed and flip short and ride it on down. So that's what I look for. That's all I look for. It's been working. Like I said, I mean, maybe I'll close 6 figures this year doing this. I'll get close to that.
So essentially you wait for a top, or what you deem to be a top of something, a top of the mountain. I call it a mountain typically. If it builds up sort of one side, what goes up must come down, especially on small caps, on most given days at least. You kind of wait till it reaches that top point and you say, okay, now's the time to go bear.
Yeah, there's 2 ways you can go about it. You can throw bullets at it, which I've done in the past, and I've avoided that lately, although I do like it because your consistency does go up. I like it for that. Okay, let me clarify, traders. I don't like it because when you get the trades that just teleport all the way up. Like there have been very I'm thinking QMMM with NOS. I don't know if you recall that one. It went from like 4 to 400. It was such an anomaly. And then
too long ago.
So CAR, I did short that one on the actual day it dropped. I got lucky with that. CAR, I got at that 800 level. I didn't hold it till 200. But yeah, that was multi-day. That is something I'm looking for. But usually I'm looking for that kind of a move in a singular day. A lot of the big traders that trade in the small cap land that are trading at a larger scale, than I am, they look for the first red day. So they'll wait for it to go for 4 or 5, 1,000%, but they're putting it on their watch list. They're not trading it day one because a lot of traders have this rule. Traders that are listening, if a ticker has like rotated its float 10x in a day, there's too much manipulation on it, and they'll step aside. Essentially, just bench themselves until traders are less focused on it and more focused on the next shiny object. And then when a ticker is sitting, this is essentially my hangover setup, Jesse. A ticker's sitting up 1,000%, and there's no volume like pre-market after hours, and it's opening the next day. And all the traders that are long on it the prior day are like, "Oh, are we gonna hit like the next big wave today?" And there is crickets. It's crickets. So that's when I like to go short, and they're all panic selling. Yes. That's a good edge I like to trade. But yeah, the bullet style you can go, or what I've been doing more recently is I'll just let it run irrationally as long as it wants to, and then I just jump into the stockpile of the panic selling and the shorts jumping in. If it, like, let's say it goes from, today was edible, it jumped up from, let's say a ticker goes up from $1 to 10 to 20. I mean, I'm just sitting there on the sidelines waiting until I start seeing the panic and the selling. I mean, people are going to profit take. That's part of it. If a ticker goes up from $1 to 10, they've 10x their money. Take some profits. Yes. So they take profits, shorts jump in, and then it gives you a clear risk level, right? Which is part of the asset that we talked about: allocation, stop, entry, target. So now figure out what you want to risk. That's always going through my mind. How much do I want to risk on this thing, and what's my risk level? And then let the profits kind of take care of themselves. Mark Douglas had this quote. He said, "Be rigid with the rules, flexible with the profit expectations." I love that quote, and I live by it 99% of the time, Germex.
There's always that moment, right? Where you step outside, you're like, yeah, YOLO, baby.
Yeah, yeah. The YOLO moments are bad, but look, I mean, 10 years, they still, it's very rare. I give myself like a day a month. A day a month, I'll max lose on something, but it won't be detrimental like it would have been because I have like 5 seatbelts on.
Yeah.
I got drawdown, max law, I just protect.
The seatbelts do protect. Absolutely. Let me ask you this. So if a position starts working against you and let's say you're wrong, at least in the initial moment, do you ever find yourself averaging in a position where you're saying, okay, it's moved against me, but I'm just going to go ahead and average down? Is that part of your plan ever? Or if it just really moves against you, do you have a hard stop where you're out, it just knocks you out and say, okay, my thesis was wrong here?
Yeah, that's a great question. I mean, it has to be a part of the original plan. If the original plan is, like I said, bullets, I'm shorting into the strength, but I'm going to be stabbing at it like small. So I go 100 shares, 200 shares, 400 shares, 600. I'm starting small and sizing into it if that's part of the plan. Now, if I go my full allotment and it goes against me, it becomes invalidated, like you said, the thesis, in which case the trade comes off. Now, something that you should do, traders, that I've made the poor mistake of doing sometimes is re-entering. And this is something I asked Jeff Holden because they talk about the A+ trades often. His whole motto is swing hard when your A+ setup presents itself. I love that, but I did ask him specifically about the car trade that you mentioned, Avis, because that was this is what I asked. Let's say you have the A+ setup, right? You got an A+ setup, but but your A+ is when cars at like 300, and now and you tried it. So let's say you took a max loss that day, but then the next day it's at 400, and you cannot. You're like, this opportunity is still huge, but then you max loss that day, and then it's at 500. So, when does it turn from an A+ to like a C? That was something I was curious about because that's where I've made mistakes in the past where I'm like, I can't take my eyes off of this. At what point do you blacklist it and say, look, I cannot even look at this ticker. I can't trade it. I'm not going to touch this ticker. I'm not going to do anything with her. It.
I get you, brother. There you go.
Oh man.
That's great.
I don't know if your interview is going to get monetized there.
It's on now, so there we go. That's good. Any other kind of insights or anything as we end here? Anything for traders specifically that, let's say they're just getting started, say they're utilizing their own capital at the moment. They don't know what a prop firm is. I come across so many people who are asking me, who are saying, okay, you're trading, and what's a prop firm? That seems to be like the number one question that I get right off the bat. And then of course they'll ask about, profitability. They'll ask me what I trade. They'll ask other various questions, but it seems like the prop firm thing, which is very popular, there's still a lot of people that don't know about it, right? They think it's just you're using and utilizing your own capital, your own money. Whereas a prop firm, you're using the prop firm's money essentially, right? It's less risky in that regard because you're not utilizing your own money out of the gate, right?
Look, I'll let the money just do the talking, traders. I mean, I bought an account for $100. I'm at about 30K in payouts. Is that
a decent ROI?
Yeah. Is that so look, I mean, if you know how to trade, use somebody else's money. I got a family. Jesse's you got a family, you got 6 kids. Why? I mean, if I could use somebody, I'm working with 75,000 buying power. I got 3 funded accounts right now. Why would I put my 75,000 in? There's a few reasons for that. I'm mainly short. So at Trade the Pool, I don't have to pay for any locates. I'll just press the short button. That's the only button on my screen, really. It's the only one I got to cover. I got that button too. But shorting is all I do. I don't have to locate. There's a cost to that. So that plays into the 30% that you pay Trade the Pool. And everything's available. There's nothing that's hard to borrow. Yes. And that you would find that elsewhere. So the 30% I am happy to pay. I do not. I mean, that is it's a blessing to be able to take 70%. I'm using 75,000 of their dollars, and currently on funded accounts, and turn the 100 into right at about 30 grand right now. So look, I mean, when we're going to take that to 6 figures this year, it's been a dream. I mean, I don't know what argument there is really against it, Jesse. I mean, just traders go. If Jesse, if you got any videos on them, tutorials are out there, go look them up, traders, because it's an opportunity cost, really. That's how I'd put it. It's an opportunity cost not to be utilizing this amazing service.
Absolutely. Absolutely. I agree, Kevin. Where can people find you? Where are you located? And tell us about the YouTube channel a little bit, Chat with Traders, as we take this one to a close.
Yeah, Chat with Traders, guys. I mean, it's been around for a little while, about 11 years now. So, you subscribe to the newsletter if you haven't. I send out emails just giving you value. It's kind of what we're doing here on the interview. So that's on chatwithtraders.com. You can subscribe to the newsletter where I'll send you emails once every couple weeks or so. And then subscribe to the YouTube channel where we'll be coming out with videos. It's bi-monthly, and we prepare a lot. We make them as best as we can for you to add as much value as we can. And outside of that, I mean, Friday nights, I'm on Trade the Pools channel with Jesse. Jesse Trades. Come have a beer with us, traders. We just hang out and talk trading. It's such a good time, hanging out. And I know Jesse's doing a great job being an analyst over there as well. They do a great job at Trade the Pool to help you guys out. It's my Disney World, Jesse. This is my Disney World.
There you go, brother. I agree. And for that information that Kevin just mentioned, I'll put in the description below here. So that way you can find chatwithtraders.com and his YouTube channel. So that information will be plugged in below for you. So Kevin, man, it's been a pleasure. Thank you so much for doing this.
Oh, anytime, Jesse. You do great work. Thank you. Appreciate you.
Thanks.